India's rupee is at 96 against the dollar. Reserve Bank reference rate, May 20, 2026. That's the spot. That's the announcement. What India Incorporated actually pays per dollar, after the forward premium, after the duty, after the inventory cycle, is closer to 98. The difference is the rate nobody publishes. A chief financial officer at a mid-cap industrial importer runs a hedge book of about 700 crore rupees. His input cost is roughly 35% dollar priced. His natural hedge, the part of revenue that's also dollar priced, covers 20%, not the 50% the deck assumed. Spot is 96. Landed cost after the rolling hedge plus duty plus freight is closer to 98. Reported margin holds. Cash takes the hit. The gap is 1 quarter long and it parks in working capital, not on the income statement. A treasurer at a large information technology services exporter, think Tata Consultancy Services, Infosys, Wipro, runs a hedge book that at Tata Consultancy Services was 66,475 crore rupees as of March 2026. When the rupee weakens fast, the hedge book locks the realization at last quarter's spot, not today's. Constant currency growth held at 4.2% at Tata Consultancy Services in financial year 2025. Reported rupee revenue lifted. But the realized rate on the hedge book trailed the headline. The headline says weak rupee equals export tailwind. The book says the tailwind depends on what was locked 3 to 12 months ago. A chief financial officer at a consumer goods company runs cost of materials at about 50% of revenue. That's Marico's number, last financial year. A meaningful chunk of input is dollar-linked. The rupee moves. Procurement cost rises in the same quarter. Retail price doesn't move for 2 to 3 quarters. Inventory carries the new dollar cost. Revenue carries the old retail price. The gap parks itself in working capital. Gross margin compresses for 2 to 3 quarters until the price clears. None of these 3 rows is a single disclosed line on the financial statement. What is announced is the rupee. What is averaged into the rate they run is the forward premium, the duty, the inventory cycle, the hedge book maturity, and the dollar loan reset. They quote the rupee. The rate that clears is the rupee they run. The publishable test, per quarter, per asset class, per cohort, is the realized rate every company actually paid against the average spot that quarter. The disclosure standard the announcement has been averaging out sector after sector. Read the full brief.